Portfolio Builder members, welcome to our Monday Trade Alert. We'll be covering the SPY ETF today. However, our Thursday play did very well. I just wanted to show you guys a text message I got from one of our clients, Kirk Wells. It says, Jason, I'm up $8,500 on 25 contracts, not contacts. On the TLT trade, should I close the position out early? Now, we're not financial advisors. We don't give specific investors specific advice. So my comment was that he can if he wants to play it safe. This is our Thursday play. We only touch the positions on Thursdays, and this allows our strategy to be very passive and easy to follow for everyone. So welcome everybody. Let's see if we can get some people chatting with us. If you're listening live, please say hi on the chat box. Take advantage of the interaction you can have in our live stream. And if you're watching this later, you won't be able to chat live. Just remember, at noon, approximately Eastern every day, this goes live, and I'm here to answer your questions. So with that said, welcome Dean and Victor's on the chat with us, part of our team. And again, if you're listening live, oh, there's Scotty. Hey, Scott, how's it going? Did you take the TLT trade? I spoke to Scott personally not too long ago and had been pulled off of... Hey, Tom, welcome. Just entered today's trade. Good. Okay, cool. Welcome, guys. Hey, it's really nice to get a little interaction in there. We really appreciate people chatting live with us. Poor Scott had gotten scared out of the equities market because of all the doom and gloomers out there when we were telling everyone to go long, and I think that's what made him really excited about our program. So, yeah, what's your feedback so far, Scott? I know you haven't followed us for too long. Ernest is in. Ernest is a big player. Welcome, Ernest. He's been following our program for quite some time. How long have you... Or no, you're actually relatively new, huh, Ernest? How long have you been following the trades? Kirk actually was about to quit our program because we had a flat month in July. Called up Dean. Dean talked him out of it, told him, hey, use the full strategy, balance your portfolio, stop trying to chase a hot trade. And now the guy made more than our membership costs in 2 trading days. So that's great to see. You love it. Okay, that's great to hear, Scott. Ernest, did you manage to get that TLT trade? I know the minute we put that out, the TLT started to collapse. We had a bearish trade on the TLT over the last few weeks. So people who missed it, because it had just moved so quickly. Now, usually rates, which is what the TLT is really just an instrument to play the long end of the interest rates, which are the most volatile. So that's why people like to trade the TLT so much. And normally those rates are just very slow movers, but we saw that collapse in rates, or rather collapse in bond prices. And the rates on that 30-year just jump really fast. So some people were not able to get this trade. Great. Who else is on the live stream that hasn't said hello yet? We've got 15 watching. I really appreciate the interaction. Want to get the most out of this technology. It's very cool that YouTube has this. You have to have over 1,000 subscribers, but you can live stream. Plus, this recording will be automatically posted to our channel immediately after. All right, guys, so because I did show a testimonial, I've got to throw up our disclaimer, which is fair enough. Got to keep the SEC happy, right? So there's our disclaimer. Essentially, trading's risky. You can lose your entire investment. Our model portfolio is not a real money account. It's a model portfolio, although I am taking all the screenshots from a real trading account. So all the prices are real time. And I think everybody knows we're not playing with penny stocks here. We're trading the SPY and the TLT. So everyone's getting very close to the same results. This is not financial advice. This is a publication. Some of our staff does follow the trades with real money. However, we do not give them the trade alert information prior to our release. This way, no one can get accused of front running, unlike many other trade alert advisories out there who quite frankly are clearly front running their members. Testimonials are unsolicited and are not indicative of average results. So we're not out there bribing anyone for feedback, and everyone has slightly different results because of different fill times. Now, our program is designed to deliver the alerts at a predictable time and place, which is resulting in a very, very high success rate. We'll often say we have a 99% success rate, but this is not an exact measurement. This is based on people having a high rate of success and almost no one wanting to refund our program. And again, other programs out there, just from my knowledge of being in the industry for over 10 years, they have a huge problem with people buying the advisory. Nobody gets the results. And guess what? They all end up refunding and charging back. So these advisory products out there have a horrendous 50 to 80% refund rate. We've actually only had one refund, and it's because the lady just simply didn't follow the trade alert. She bought the SPY and then did not follow the options trades. So we're very happy that we do have such a high success rate, and I think it's really just because of the design of the program. You know exactly what you're going to trade. You know when you're going to trade it. And so as long as you can show up and put on the 2-minute trade, you're good to go. So yes, we're extremely easy, on the go, daily retirement income trade alerts. Dean says it takes 30 seconds a day, but who's counting? He's a little bit faster than most. My father says it takes him less time to take out the trash. And I ask you, why make investing complex? Don't you have better things to do with your most precious asset, your time? My promise to you, I will protect your assets and show you how to pick the low-hanging fruit. Our put options hanging right below the SPY and TLT ETF make it impossible to lose very much money, period. So if you do remember our disclaimer about losing everything, well, that's just what the SEC wants to say. If you really do follow our trade alerts, it's extremely hard to have a very large loss because, again, we own the SPY, the TLT, two most diversified products in America, at least. SPY represents 504 companies of American companies, and the TLT represents the tax receipts of 350 million citizens in America. So it's hard to get more diversified than that. To put things even safer, though, we always have put options below the SPY or the TLT, and then we finance that by selling call options. Now, sometimes we try to make profit from the call options, but again, our goal in this program is income. I know for a fact that Dean does do that. He takes the macro view, puts his knowledge into it, and he's had some huge returns this year that I won't even bother to talk about. But you can certainly take our information and convert it from income and safety to growth or speculation if that's what your goal is. Most of our clients do not want that. So our target return on investment is a measly 1 to 2% a month, and we've only had one losing month of negative 1%. We've been averaging closer to 2%. And so if you do watch this daily YouTube video, you'll know exactly the rhyme and reason of every single trade alert. Tom Wasser, good morning. Hello, Tom. How's it going? Have you been taking any of our trades? Quick review of some of the strategies you can use to follow our program. If you want the light allocation, costs approximately $66K. And we have 20 people watching live. This is great. This is the most we've had, and this audience is growing. If you want a light allocation, $66,000 gets you to the gets you your buy-in for the poker game per se. We're going to have 100 shares of the SPY on Monday, Wednesday, Friday. That's going to cost you 30 grand approximately. and then 200 shares of the TLT, which we trade on Thursday. So I'm going to put you to work on that SPY trade. We're going to take advantage of the options market, which expires 3 times a week. So that's really good for generating income. And it's even better for protecting capital because we can just simply react to the moves of the SPY every 48 hours. Now in the TLT, they only have options once a week, so we're only trading it on Thursday. Thursday is an important day for that strategy, especially when we're doing what I call the upside down collar play, which is how Kirk made such a huge profit on the TLT. So having some time premium left, an entire day of time premium, can be in our benefit when we're betting down on these different assets. And in this portfolio, we still recommend a buy and hold on GDX of $6,000 or about 10%. So you can see we have, some people call this the dumbbell portfolio. You got half your weight on the equities, half your weight on the bonds. And then depending on what you're seeing in terms of what the central banks are doing, you either want to be long gold or short gold. And quite frankly, it looks like we're leading up to a monumental period of quantitative easing, negative interest rates, and so the party is potentially just getting started on gold. We'll take a closer look at that. So that's one setup. This would skip our Tuesday play. Here's the extra light portfolio. 100 shares of Facebook, 100 shares of TLT, and 115 shares of GDX gives you that same dumbbell allocation, but it's higher risk because instead of trading the SPY, which is 504 companies, now you're at the whims of risks on Facebook. Now keep in mind, I have a put option below Facebook, which I'm financing by selling a call option on top of it. Now we may be switching the security tomorrow. I'm considering United States oil ETF based on the attack on the Saudi. Really, this is the world's biggest source of oil. Just got drone attacked. Pretty crazy. We're in a world where little video gamers are now the front runners of the military. So we'll take a close look on that. I haven't made a decision on the Tuesday play yet. Facebook's also meeting with the Fed right now and a bunch of other central banks to push their Libra project through. So it's definitely hard for me to decide between Facebook and oil or silver. Those are the 3 I'm considering for tomorrow's trade. And again, you'll have to keep an eye out for tomorrow's trade. Now, a lot of our members do follow the full program. They love getting the daily trade, the income trade. Here's how you can allocate 100K to get that same asset allocation. You have 100 shares of the SPY Monday, Wednesday, Friday. Play the Tuesday trade on Tuesday. Sometimes we do Apple. Sometimes we've done silver. And I'm also looking at Microsoft. So that rotates whatever I think's the least risk with the highest reward opportunity for that given week. Okay, then 300 shares of the TLT keeps you balanced out, and now you're going to need a little bit more of GDX, 333 shares. Now, I do have some recommendations to further diversify your buy and hold portfolio. So that's not just purely in the gold miners ETF, GDX, but it's totally unnecessary. The whole purpose of that buy and hold portfolio is achieved simply with GDX. If you want to spicing it up, I would talk about that in a minute with Bitcoin and Ethereum. So we'll take a look at that. Now, if you're not seeing the trade alert in your email, your free trial may have expired. And even if you did see the trade alert in your email, eventually you will expire. So it makes sense to call Dean 505-322-7515 so that we can get you signed up with a real membership and make sure you don't miss out on any trade alerts. Now, Dean's an expert at options trading and investing. He can review your total portfolio, tell you where you're crazy, where you're putting on too much risk, and not necessarily worry about how much you're going to make with our program. How much are you going to lose if you don't join it. That's another thing to consider. How risky is your current portfolio given the current circumstances? Okay, some more reminders, then we'll jump into today's fresh content. We have a webinar for paid members only Wednesday, and then we have a free webinar Thursday. Now, in those webinars, you can actually chat live, and we can hear your voice and actually get to know you a little better. Whereas this live stream, you can chat just only with the text. Another thing, if you have a phone app of YouTube, you might consider subscribing to our channel and clicking the bell. This will allow you to automatically get the alert every morning of our live stream. That way you can chat live with our community and really get the most out of this program. If you're not chatting with us every morning, you're really missing out. Okay, let's take a look at today's content. Okay, so we got the big news is probably a 25 basis point cut today, or rather Wednesday, from the Fed. I think it's just enough to piss off the bond market a little more and send stocks higher, keep that dollar strong. Maybe it's not great for U.S. exports, but as far as our positions, I really like a 25 basis point cut coming up Wednesday. That's my prediction. That's what a lot of people are throwing it out. So we'll see what really happens. I'm on alert that they don't do anything at all because we did see inflation tick up a little bit. So this is the biggest market mover. We've only had one Fed speech this year that didn't result in a huge rally in equities. And so when we look at China dramatically becoming more dovish, 30 other central banks lowering rates, the ECB just came out saying they're going to buy up, I think it was $20 billion a month starting November 1st of debt. That's going to push a lot of capital into stocks. And then we're seeing that huge sell-off in the bond market, all at the same time that the U.S.-China trade war is having a period of peace because of their 70-year anniversary on October 1st. So you put that all together, this could be a huge movement for U.S. equities through September and into October. Now, sure, there's some risks. Primarily, that would be U.S.-China trade war escalating. Okay, so let's take a look at the results. We had our first loss in, I think, 3 weeks of $1.58 a share. And we're putting on the same trade as, or very similar trade, the same directional trade as we have been doing for the past several weeks. In fact, we've been doing this since the SPY had that crash and everybody freaked out because Trump increased the tariff threat. So here's a look at our return on this portfolio, but to do the accounting real quick, just so you guys know how to do your own accounting, you really just have to track two things, guys. Number one, when you put on the trade, what was the SPY worth? And then when you took off the trade, what was the SPY worth? So in this case, the SPY was trading at 302 Friday when we put the trade on. I'll show you the proof. Here's the Friday trade. Okay, so now it's quite a production we put together here, guys. We take the screenshots at around 11:30 Eastern, put it into these docs, and then our technical team comes in and we've got 26 people watching us live now. Welcome, everybody. Please take advantage of the live chat and know that you can scroll backwards if you want to start from the beginning, which I would recommend you do, so you don't miss out on any of the content. So thanks for joining us live. This is by far the most people we've had live stream. Okay, accounting-wise, we need to keep track of two things. What happened to the SPY? What happened to the options? Okay, so we can see that we started off at a value of 302.04. And remember, we've been writing this same play. Okay, we got a question from Tom. So are there options for trading accounts with less than 66K? Yeah, Tom, for sure. So actually, if you put 25 grand into Interactive Brokers, they're going to give you $100,000 buying power. So you could actually follow our full program with just 25K. Now, normally I'd say never use leverage, but you can see this is an extremely risk-adverse system. And also, I will point out, even if you didn't want to do that, if you want to start off with the least capital possible, then this is your setup, our extra light. Mo says, where do you see the SPY is going? Well, rewind the track, Mo, and you'll see where I think it's going. But the answer is way higher, at least through September and October. The best broker to use, guys, is Interactive Brokers. By far, there's no question. This is your best bet. They charge a dollar contract. They have a phone app. They have a trading platform. They have Forex. They have options. They have futures. This is the best broker, bar none. Now, after that, sure, I love Thinkorswim from TD Ameritrade, but now you're getting way fancy. Okay, so let's go back to... So I want to teach you guys how to audit these returns so that you can do it yourself. And again, if you've been watching some of our previous content, we've had a pretty long win streak on this. So a little dollar pullback from Friday to Monday after the world's largest facility for processing oil gets attacked by drones is not a big deal. Okay, so trading price went from 302. And the option contract in this setup is not designed to profit from the options. The options are going to be a drag on our profit during this period of time. So I'm predicting SPY's going up to 315 to 330 range, where I call the danger zone. And the risk is that the trade war with China breaks down. So they've been promising farming product purchases for 2 years now, and they have slowly but surely cut off all the farming purchases. So the question is, how much pain does China have to have before they give in and start being able to get their party, the Communist Party, to agree to something before they completely collapse? So trying to figure that out is very difficult. We've seen the prices of pork go up 50% year over year, which is their main source of meat. All the other places around the world are really a joke in terms of quantity that they can produce. So they need our food badly, but they've been using that as their number one card for trying to negotiate this trade deal. So the key thing I'm watching for down risks in equities would be this farm purchase deal does not happen. But with their anniversary coming up on October 1st, I think they may actually buy some farm goods and put some relief on their economy for the time being. Now, I don't think they're going to agree to stop, the 7 sins that they say about what the trade deal really encompasses, because it would give up a lot of their country's competitive edges. Faster than you would expect, Mo. I think by October 15th, I think we'll be in that range. Tom says they may increase by 25 points. I highly doubt that, Tom. Highly doubt that. Now, if they did that, that would be very negative for everything, stocks, bonds, gold. So that would be a shocker to me if that happened. Okay, so let's see how to audit this. So again, that's where we started the trade. Let's see how we got out today. So this is all you guys got to know how to do to follow our program. We start off the trade by selling to open the call, and then we buy to open the put. And what this does is it limits our profits on the upside, but it also dramatically reduces our risk. The worst thing that could happen is we get $2.99 a share. We could have North Korea throwing atomic bombs at Japan, and markets collapsing. We would still walk away with $2.99 a share. So sell to open, buy to open. To get out, buy to close the call, sell to close the put. Now there's one catch. If your put option's only worth a penny, nobody wants to buy it. You can just let it expire worthless. So here's the math on this particular trade. We lost $1.67 on the SPY. We gained 9 cents on the caller, a net loss of $1.58. And let's look at our total returns in these different portfolios. Now, let me zoom out a little bit. All right, so we have 4 total portfolios you can follow, and we've organized it in such a way that you can easily follow one program, or if you really follow the full advice, you can start to overlap them. And so, as we've shown you, you may do the Tuesday trade with the Thursday trade, or you may do the Monday, Wednesday, Friday trade with the Thursday trade. And some people, for whatever reason, they just want to trade the SPY. So it's up to you. We break it down. But I do want to point out how smooth our return is if you do overlap them. So this is the total return of all strategies combined. And you can see we had a 1.2% return in December. That's during one of the most ferocious market crashes we've seen since the 08 crash. I think we had that 1,000-point drop with volatility freak out. Not many things of this size. So we walked away with a nice return in December. 2.2 in January, 1.7 in February, 2.7 in March, 1.2 in April, 2.2 in May, 3.2 in June. July was our only loss, and I'll tell you why. I was expecting Trump would raise the tariffs in July. He didn't do it till August, so we were positioned very defensively in July, and it hit in August. We had a nice return, 2.1. This month we're up 0.5%. So again, we're not trying to hit huge gains. It's about safety, precaution, low-hanging fruit. Now, if we do look at the track records individually, the SPY has done relatively well almost the entire time, but the months of April, May, and July, we had a little trouble with a flat return in April, a negative 1% return in May, and a negative 1% return in July. Other than that, we've been very close to our target of 1% a month. If we go to equities portfolio 2, again, it's higher risk, higher reward. So when the market changes direction suddenly and we have not predicted it, that's where we can take a little bit bigger hit. So note that we did have that bigger loss in December of 4%. January we had 7.7, February 3.6, March 3.9, April 1.5. Similar loss in May and July in this portfolio. Kind of surprising that it wasn't larger. June 6%, very big return. So far in September up 1.9. Okay, our precious metals portfolio started off with a 2.5% total allocation in December, but that's because the Fed was telling us that rate hikes were on autopilot and quantitative tightening had several $trillion more to go. And slowly but surely, they've completely reversed course and become somewhat of a laughingstock in terms of all these promises that they're going to, that Bernanke gave us in 2008, that this bank bailout that him and Obama orchestrated were just a short-term fix, then we'd be back to normal. And what they did essentially is double the money supply, bail out the banks, and look where we are now. Anyway, December, 27% return in that precious metals portfolio. At that point, it was a tiny position in Bitcoin. By February, the Fed stopped the rate hikes and said they would end quantitative tightening earlier. So we've slowly but surely went to a 5% position, then up to a 10% position. So this portfolio recommendation in terms of size has grown dramatically and is currently at 10%. And so we are only buying and holding this portfolio. We're not doing any options to protect it. So you can't grab a 60% gain in a month like we did in May if you're selling covered call on the asset. Just not possible. And on the same breath, we have to be willing to stomach pretty sizable drawdown in this portfolio, which we've had 2 pretty big drawdowns this year, July of 11% and January of 12%. Now, multiply that by 10%, it's only a 1.1 or a 1.2% drawdown in that portfolio. So you can see July was a tough month for almost every single portfolio for us. Now the bond portfolio has been very impressive and very easy to predict so far, although I would say the latest prediction on our end to call the top in the bond prices was maybe a little bit of a gut instinct. So we've been long the TLT all year, giving up huge amounts of the profits that were that could have been achieved by the TLT if you just had bought and hold, because again, we were selling call options, which reduces our upside potential, and then buying put options, which reduces our our risk of losing money. And so it's a drag on the return, but what it results in is it creates an income strategy that's extremely safe. And so you can see, funny enough, the only month we lost is the month that the Fed actually finally pivoted and changed course. So outside of that, we've had no losing months, and August was one of the best. Now I do need to update that return in September. It's actually really high because we've been predicting the turnaround in the TLT, although I don't suspect the bull market and the TLT is over. We're just in a period of peace in the trade war. Okay, so that's our returns. This track record is linked to in your email. You can go through it with a fine comb. Here's all the tabs below. Just a quick overview of the way we provide the data. Stock trades are all organized right here, so you can see the buying and selling. Now our members get a copy of this spreadsheet so that you can manage your trade alerts as well in such a fashion. Most of our clients don't like to do that. They just like to take the trades, so that's up to you. Over here we have a spot for open option ring. I don't fill that out because this is a public doc. I don't want people who have not paid for our program stealing the trade. So I input it here after we close it out. So just know that. Here's where the closed option writing goes. If you're really using this yourself, you would want to put your trades live here just to keep track of what you have open. If we scroll over here, we have our open options. So we've got a few FXI puts. We closed out half of those for about a 90% gain, and it looks like those other half will just expire worthless now. And that's okay. I think the time to be short China is coming up sometime in October, most likely. We'll see. And then this is where we close out our options. Mostly this is our crash insurance, the put options. You can see a lot of big losses. Again, the options act as a drag on our returns, but it provides that huge layer of safety. And so then you got the TLT trades here, the SPY alternative tab here, and our precious metals. Now I am currently recommending, if you know how to get your hands on some Bitcoin and Ethereum, instead of having 10% total allocation to GDX, you could drop that to 8% and then pick up a 1% position in Ethereum and a 1% position in Bitcoin. So I'm not going to spend a whole lot of time today on the rhyme or reason behind that, but if you do want to make that part of your portfolio a little more diversified and potentially have some little bit bigger profits from that, that is my current recommendation there. So 8% GDX, 1% Bitcoin, and 1% Ethereum. Okay, Howard says, quick question, sometimes the cost change, should I still take the trade? Yeah, Howard, so best bet is jump in the live chat and ask me if I still think it's good. 99% of the time the trade is still good. That pick from Thursday where we went short the TLT was a very abnormal crash in the price of TLT where it'd been a rare time where, in fact, I did tell you maybe, just to go to cash and wait for next Thursday's trade. So yeah, just plan on being in this live chat. It's a huge benefit to be able to have live access to me right when the trade hits. So I can give you advice whether I think it's still good or not. In general, if the price of the asset has only gone up or down like 50 cents, not a big deal. We're still going to get very close to the exact same return. Because remember, if you're making a little less this time, you make a little more next time, and vice versa. So we're all getting very, very similar returns because of the way these option prices work. if I close out the trade and the SPY is at 300 and you close out the trade and the SPY is at 310, we're going to have a little bit different profit on the SPY and a little different cost on the options. And then the net is almost exactly the same return. So it's very hard to get different. Definitely plan on jumping onto this live stream every day to ask questions like that. That's specifically why I want this live stream available to you guys. Okay, so that's a review of all that. Let's take a look. This was close to 100. I think it was at 100% last week. So the probability of a 25 basis point cut coming up Wednesday, it's still pretty high probability. Now, what I've noticed is they very, very rarely diverge from what other central banks are doing. People think the Fed is some elected group of people from Congress that's here to serve the American people. But if you really study the Fed, it's a banking cartel that's designed to protect banks, and banks are international. So they are all in cahoots. Now, sure, is there competition between these different countries and the central banks? Sure. My expectation is 25 basis point cut, and I think it'll be just right to keep the exact bubble up environment we have in place. So we'll take a look at that in a minute. Dollar index still strong, and we'll take a look at the dollar versus three main currencies: the Japanese currency, the euro, and the Chinese currency. As long as we continue to have a strong dollar, this continues to point to this overall global safety trade where assets are just flying out of emerging markets into the safe haven investments, which is U.S. dollar, U.S. treasuries, and U.S. equities. All right, let's take a look. Okay, so here's Kirk, one of our members, testimonial. Again, results are not indicative of average results, but that TLT trade has been very profitable. All right, big news over the weekend was Saudi Arabia had a drone attack at the world's biggest oil refinery, and USO is up 10%. This is United States Oil ETF. Tempted to put this into our Tuesday play tomorrow. Problem is Trump is wanting to take the entire American oil supply. Trump does not want expensive oil, so we would only want to go long on this USO play if we thought oil was going to have higher prices. Same idea as that GDX play instead of GLD. So we'll analyze that more tomorrow. But now I have USO on my watch list. Okay, some tweets. First, we'll do all of the most important content I've collected from Twitter and other news sites, and then we'll look at some charts and wrap today up. Okay, Donald Trump, because we have done so well with energy over the last few years, thank you, Mr. President, we are net energy exporter and now the number one energy producer in the world. We don't need Middle Eastern oil and gas, and in fact, we have very few tankers there, but we'll help our allies. Trump calls on Fed to make big interest rate drop stimulus ahead of Fed's meeting this week. I don't think it's going to happen, which is alarming because if we want to be long U.S. equities, which I think is the right call right now, especially with the Chinese anniversary on the October 1st, I think there's good reason for a pause in trade war escalation. We have the strong dollar. We have all the other central banks dropping rates very quickly and monetizing debt, which in the big picture, it just increases the monetary supply around the world, while the U.S. is kind of just staying stuck. So that makes the relative value of all our products go up dramatically against foreign currencies. But on the other hand, Trump is ape shit on getting these interest rate drops, and he knows the best way to do that is to escalate the trade war. So that's my caveat. I'm long the SPY until Trump escalates, and I'm almost certain he will at some point. But if they were to purchase enough farming goods and not be too demanding on what concessions the U.S. makes, it could be as simple as no more new tariffs for a while. Let the Huawei continue business, release the daughter. They buy a ton of farming goods. I think that's the best possible outcome we could see this year on the trade war. And if so, SPY could get out of that danger zone and I think even break higher than 315 to 330. So we'll see how that plays out. Producer prices in China shrank most in 3 years due to China's big devaluation of their currency coupled with monetary stimulus. Federal Reserve not watching. Will the Fed ever get into the game? Dollar is the strongest ever. Really bad for exports. No inflation, highest interest rates. United States, because of the Federal Reserve, is paying much higher interest rates than other competing countries. All right, so we'll see what happens. China to ease monetary policy further. Bank of China lowering rates 30 basis points, potentially by another 100 by the year end. Crude oil posted the biggest ever jump. 5% of the global supply at risk. It's from Bloomberg. Long view. This guy used to work for Ray Dalio. Has a great feed. What mattered last week? Big rates reversal. So we saw that, I think it was a 30-year jump from 2 to almost 2.5 in like 2.5 weeks. An insane move, which we did play on the TLT very profitably, betting down. We saw that value momentum reversal for like 2 days, and then it reversed back out. So I'm not sure if that's something long-term. Now we are seeing that Russell 2000 get a nice bid, and all of the credit markets look strong. Tom Wasser says, can this be done using an IRA account? Absolutely. In fact, it's really nice because now you don't have to pay that capital gains tax on all these profits because we're making these short-term gains 3 times a week. And normally you'd be having to shell out 35% profit on every single trade, not allowing you to grow the portfolio. But in an IRA, depending on what type, you'd only pay those taxes at the very end. So that is a good advantage. So yes. Retail sales look solid. Manufacturing still weak. China is the largest importer of Saudi oil. This surge in prices is just what its crashing economy needed. Donald Trump, plenty of oil. Saudi Arabia oil supply was attacked. There's a reason to believe that we know the culprit are locked and loaded depending on verification, but we are waiting to hear from the kingdom as to who they believe was the cause of this attack and under what terms we would proceed. Biggest jump since 1991, 19% jump in prices. Based on the attack of Saudi Arabia, which may have an impact on oil prices, I have authorized the release of oil from the Strategic Petroleum Reserve, if needed, in a to-be-determined amount. Here's some photography of the attacks. Scary to have these huge drones flying around, blowing up one of the most valuable assets in the entire world. So I bet they invest in some pretty serious defense systems after that. But yeah, what's really going on here is that probably Iran. Iran's being sanctioned heavily, trying to block the oil to China. So I think this may actually continue to become a bigger and bigger drama over in the Middle East. We also have that Aramco IPO, who would love to have higher prices. So I'm still doing a lot of research on this. I'm very tempted to put USO into the Tuesday play. But I also like Facebook right now, so that's kind of why we're looking at this oil play so much. Now, on the other hand, if oil prices do get out of hand and stay high over time, that will push inflation into the system, and that's an absolute mess for this whole thesis that the central banks are going to be able to keep lowering interest rates. So another important thing to watch is that price of oil getting out of hand. Bank of Japan said to consider additional interest rates. These guys own something like 60% of their stock market from the central bank. They've had 30 years of no returns. Is this where the U.S. is headed? And all these other big economies that continue to be reckless with monetary policy. There's a picture of the drone attack. If you do want to look at all these screenshots in detail and read it all, the Google Doc link is in the description box, so I'm just scanning the key. Okay, they're blaming it on Iran at this point. The crude stockpile is dramatically reduced. So we got to keep a close eye on the price of oil right now. Bottom line, if it gets too expensive, that could be very troublesome for the stock and bond market. U.S. poverty levels fall to pre-recession low. So with the government creating huge debt and easily funding it because of the global macro view, this should keep the consumer strong and keep all our GDP numbers strong and keep the U.S. equities market really strong. So I really, outside of trade war escalating with China, am very bullish in U.S. equities right now. So I think we had a few repetitive slides there. Tim Draper is now saying 250K Bitcoin might be underpriced. Kind of funny. Just a little tweet on that. Here's a look at some of the crises in the oil market in the past. So right around the $50 to $60 oil mark, everybody's happy. Inflation's low, oil companies are making money, everything works smooth. But we get oil too cheap, the oil companies are going out of business. And if we go too expensive, then inflation comes roaring in and it forces the central banks to start hiking rates. So yeah, the most important news we got to pay close attention to is China really going to buy farming goods. Why is that so important? These are the states that are being targeted by China to try to defeat Trump from re-election. So that's why I think it's the single easiest way for a trade truce is a simple farming purchase. Now, the question is, what concessions will China want out of the United States if they start buying farming goods? Meanwhile, they really need the food. So there's good cause for them to buy food without looking like they've been weak in the eyes of maybe not the people, but the Communist Party. Okay, we're going to wrap it up with some charts. Emerging markets is an ETF I would like to be long. This is a favorite of Ray Dalio. Drunken Miller, I don't want to go long this until there's a real trade truce, even if it's a short period of time. Because to get back to recent highs, $52 to $55 is a good target for that EEM. Something I would consider doing in our Tuesday trade. Right now we're doing Facebook. I really like Facebook as a company long term. It's got an absolute monopoly. It's developing a product that can solve probably the world's biggest problem at this point, which is reckless central banks, reckless governments with huge deficits, which is just eroding the savings of anyone who does bother to save. So big picture, long-term view for Facebook is they own all of the top used phone apps. We're in a world where Howard says, so you're long SPY for now. Yes, we're super long SPY for now. With put options below and call options above, dragging, but yeah. Okay, so we're getting towards an hour. Let's go ahead and wrap this up in a minute. SPY chart looking beautiful. I think we're about to really blow people's expectations out with a huge move to the upside. Not only do we have a period of peace, somewhat likely between U.S. and China, not only do we have the Fed in a plan to drop rates, probably, not only do we have all of the central banks around the world already having dropped their rates, monetizing debt, devaluing their currency, which in effect makes the relative value of U.S. products more valuable. We've got, every single thing is lining up perfectly for the SPY right now. TLT is tanking. We called the top on that. That's my favorite trade to brag about this year. But I don't think that China is going to give up their competitive edge in the world. So I think this is going to be a short-term sell-off in the TLT that may last through. It's going to last until Trump raises tariffs. That's how long it's going to last. And when he raises tariffs will be highly dependent on how much farming goods the Chinese purchase from us, if any. Facebook, again, they dominate the phone app business. They have all of the top used apps. They have the most users of anyone in the world. We're going from a world where people are throwing away their computers, just using their phone. So to have a monopoly in the phone app space is incredible. Not to mention they have a monopoly in the social network space, and they're developing a currency that can solve a major problem for the world. So we'll see if that really gets approved. They're meeting with the higher ups right now. Emerging markets, again, 1.4 billion people who went from living in sticks 30 years ago, farming rice with absolute poverty, to now they're manufacturing electronics and building railroads and houses, and they've had at least a few generations coming over to America to get top-notch education, which they're now bringing home. So China, in the long run, is an animal. It's huge. It's going to be a big story. But, is this the time to go long emerging markets? Certainly not yet. Maybe for a small play on a trade truce. But I don't think that China is going to give up their competitive edge. And the main difference between U.S. and China, again, is that China considers their entire country one thing. There's just not all these individual people and companies that are all trying to use capitalist ideas to create profits and run their economy. Instead, they're using a centralized, planned economy. They're subsidizing the key industries they want to dominate in, and they're controlling their people in a much different way than the U.S. is, which gives them a huge advantage in some respects. So to think that 1.4 billion people is not going to produce a lot of economic value now that they've really planted the seed is foolish. The question is, when do you actually go long emerging markets? So this would be a Tuesday play. Not ready to do that just yet. LQD is the ETF that I track to measure the health of the stock buyback. So biggest buyer of stocks has been corporate buybacks. Now their time horizon is really infinite because it's a corporation. It doesn't die. So they don't mind purchasing shares at record prices because they're happy to hold on to it for quite some time and reduce the float. So as long as these corporations have access to cheap credit, they can keep buying back their own stock. It's going to be very hard to break that loop. So I'm keeping a close eye on LQD. We're not trading that one. Now, this is remarkable. The high-yield corporate bond ETF is at all-time highs. So now we're seeing not just the top companies performing well, we're seeing the middle of the bunch doing well too. So this is more relative to that Russell 2000, which is IWM, looking very strong. If this really breaks out towards that 171, and we get a trade war resolution, and we get all the central banks lowering rates, trying to get in front of a recession, that's just crazy. We could have a huge bull rally ahead. Now, of course, there's things that can get in the way of that, which we've been talking about, but that's why I track IWM and HYG. if we can get those in a strong path, we might have a much longer bull market than many people expect ahead. USO, you can see the tremendous buying of this ETF since 2016, and so we're considering that one for a Tuesday play. Meanwhile, in Europe, Deutsche Bank sitting above 6. That's all I really care about on that one. If it goes below 6, a lot of analysts who specialize in this say it could mean the collapse of this Deutsche Bank, which could be a huge financial risk to the entire banking system. And on the same breath, HSBC has been firing a bunch of people. Presumably, they were helping support the Chinese currency, trying to short the dollar with future contracts. It looks like they lost a ton of money. That might be why China's suddenly coming to a farm deal, because it looks like they're starting to run out of money. A little bit of a sell-off in the Chinese stocks, nothing too crazy. Bitcoin remaining strong. A lot of people are saying if there's a major sell-off in Bitcoin and cryptocurrencies, that might mean the trade fears were really coming to an end. So definitely keep a close eye on that. I also think that because the central banks are lowering rates back towards zero, the ability for these products to thrive is better now than it ever has been before, because we're about to potentially go into a massive quantitative easing period around the globe. Oh, sorry guys, I keep clicking the wrong button. All right, we got a few more currencies and rates to look at, and then I'll wrap up today. This is the most important chart in the world right now. Download the Bloomberg app. It's free. You can watch this conversion rate of the yuan against the dollar. Every time this spikes, within hours, we see stocks sell off and we get some angry tweets from Trump. And so if you want a leading indicator to risk in the market, this is your best bet right now. And I think that if there's no resolution to the trade war, this will devalue to the $8 to $10 range, which would be huge. This would force all of the other exchanges around the world to dramatically reduce the value of their currency. And if we have the Fed knowing this and dragging their feet so that they can keep the Treasury market funded, it would just support our entire strategy dramatically. Now, if this continues to crash to a better conversion rate, that would tell me that maybe we need to look at emerging markets, because it would say they're actually wanting to make a deal versus try to fight the trade war. Euro continues to crash against the dollar, again showing the same picture that we've been talking about. Same thing with the Japanese currency. I like to look at the German 10-year rate as a leading indicator to predict the U.S. bond treasury interest rates. And it's done a very good job at that. So we're having a little bit of relief. Do you see the similarity of these two charts? So correlated. And again, Germany is a huge business partner of China. So if we look at the health of Germany, we get a better idea of what's going on in China. China says that their company's books, their accounting, is a state secret that they won't let anyone see. So we really have to judge what's coming out of China not based on real accounting, but instead on what they're doing with their trading partners who we can audit. Otherwise, you have to just trust their statistics, and they are not very trustworthy. So, all right, guys, that's a wrap for today's trade. We've got a new play Tuesday. We'll see what it's going to be. Might be Facebook, or it might be USO. Those are the two I'm debating on right now for our Tuesday play. If you don't want to miss the trade, call Dean, 505-322-7515. Let's get you started as soon as possible. Real quick, if you're on the live chat and you have any last questions, please post them now. Otherwise, hold your peace. All right, guys, thank you so much for your time. Remember, tomorrow, same time, live stream. We really appreciate having you guys on there chatting with us. Makes it more fun, more interactive, and more interesting.